Morning, gentlemen.
Good morning.
Good morning.
All right, guys. So today we're going to talk a little bit about something that is not very well known about and is going to be very beneficial for you guys that are, not liquid as much as you'd like to be right now. And there's obviously opportunity out there. So I've got Sam again with me from his Capital Funding out of Orlando, Florida, but you are in Chicago right now, correct, Sam?
Yes, sir. I am enjoying the snow.
And I have a good friend of his, Mikyle, here, and he's going to talk to you guys about basically getting business lines of credit set up, business credit established. So, Mikyle, take it away, man. I'm excited to hear what you guys can do for our members and our people of our group here.
Greg, it's a pleasure to be here. It's I know we're connected through Sam, and Sam's been a good friend of mine. He's known me since day one, and we're both in Chicago here. Just to give you guys a little background on myself, my name is Mikyle, Jessen. I've been running a company called National Corporate Credit, and I've been in this industry for about 10 years now. I have a real estate background, so I speak a lot of the same language as most of the members on the Facebook group, but we focus on raising capital for companies. I work with a lot of different types of businesses, startups, small businesses, some large businesses, and we really designed a program that allows people to get access to funds that they can use without really any restrictions on how they use that capital. We've really got two programs. One is our business credit program, and the second is our term loan program. Okay, so two different types of products. Everything we do is unsecured. So there's no collateral. You don't have to have any property you put up. We're really looking at two things. The first is your personal credit. We like to see at least 700 or higher personal credit scores. And we can raise up to about 150,000, sometimes up to 200, just based on your personal credit. Fully stated income, just based on credit. The actual funds that we're able to raise for you don't show up on your personal credit, so you can use them for the company. You can max them out. You can utilize that capital. You're not really combining your business and personal credit or mixing that together. I know I've got a lot of clients in real estate that will come to me and they've got $40,000, $50,000 on their credit cards because they're doing a rehab. Unfortunately, that brings your credit score down, and I can't do anything for you when you're over leveraged. It's common. I see it all the time. But what we really try to do is just get you funds under the company, move a lot of that debt over there that's being used for the business. That way, anything that you're using that would be highly leveraged or would be showing up on your personal credit is only under the business. That secondary program we have is a term loan. That would require two things: strong personal credit, and we like to see income of at least $50,000 or more, adjusted gross income, by the way. And we're able to raise up to $300,000. So again, everything we do is unsecured. We can go up to $300,000. Our program is usually between 5 to 7 days from start to finish. Okay, so there's those two items we're looking for. There's really two documents that we review. We try to make it as easy as possible for somebody to come to us to get access to funds, and make it very easy and streamlined for them to do business with us. The two documents we're looking for from any borrower is a copy of their credit report from myfico.com. That's the source we use. It would only be a soft pull, so they're not getting their credit pulled. And then we like to look at the last copy of their personal tax return. So if they have 19, great. Most don't have that. We're kind of in that little balance period where most lenders aren't looking at 17 anymore. They're not really wanting to look at 18, but nobody's filed 19 yet. So we're kind of in that gap. Right now, we're still looking at 2018 returns. We can source the income for 19. But if they have those two factors, it gets them in the door. What really determines how much we can raise for them is a couple things: how much their income is and how deep their credit has been built up to this point. So when I look at the depth of credit, I look at a few things. How many years of credit history do you have? Sometimes your credit scores can be a little deceiving. You could be 20 years old and have an 800 credit score, but you don't have much credit built. So he wouldn't get that much money, or she wouldn't get that much money, compared to somebody who might have a 720 score, but they have maybe a $15,000 or a $20,000 credit card. They've got good history. They've had a mortgage. They've had an installment loan. It just creates some more depth to the profile, and it allows me to raise more money for that type of person. So, just to give you a little feedback on the types of businesses, again, I work with doctors, dentists, attorneys, all the way down to startup companies, to restaurants. I do a lot of franchise work. And I'd say that the best types of clients that come to us are the ones that have credentials after their name, like the doctors or the dentists. But who I work with the most is really real estate investors. I mean, we're 10 years, 12 years out of the recession, or since it started, but investors are still looked at by banks as high risk. They don't want to play ball with them. I can work with them all day. It's easier for me to help them because, number one, I understand their business, and I'm able to help coach them on how to best apply the capital to their business, not just how to use it now, but how to grow it so that over time, they've created their own source of liquidity that they can tap on. And they don't have to go back and get approval from a bank or a hard money lender. They're their own source of funds, and they can continue to turn that money over and grow it over time.
Okay. So let's talk a little bit then, like, because the big rage right now, everyone's talking about are SBA loans from the government, because literally it's everywhere on every news media outlet about applying for, the grants and the SBA loans. Can you talk a little bit about, because it sounds like this is not the same thing.
No, it's definitely not the same thing. It's an alternative to it, and we're doing a lot more lending now than we would normally see on average, considering the circumstances and the fact that the whole world's kind of on fire. I've got a lot of people that will come to me and say, hey, I'm trying to get the SBA funding, and I'm completely encouraging it. If you can get it, get it. The problem that I see, because I have friends that work within the SBA and other groups that provide that financing, is it's like everybody's trying to go out the door at the same time or go in the door at the same time. So you have a mad rush of applications. And what we're seeing is not that they're not getting as much money as they anticipated, and it's also taking longer than they expected to get the funds. I've got a couple clients of mine that got a check for like $7,500, and it doesn't do them much good. I've got people that need working capital and they need 50,000, 100,000, even 200. So I never will say anything bad against it. I have clients who need money now, and even if they're going to put it on the sidelines, they need to be able to gain access to something that can quickly deliver and give them the liquidity to really sustain any type of downturn they're going through now, and also to implement strategies that are going to help them get ahead. I mean, this is really a time of opportunity, and I try to frame that for all my clients too. People are always looking for a leader that they can have confidence in, and that they can go to that's going to give them the assurance that they're making the right decision. So we try to fill that role as well.
Awesome. So, Sam, you got a question, or you're going to say something?
Yeah, I'm just curious, Mikyle. I mean, it's funny because some people ask me, why are you bringing the money guy on when you're supposed to be the money guy? Hey, look, the job is to serve, right? And to do what we can to keep everybody moving forward, no matter what that takes. But when I look at, I've dealt with other organizations somewhat similar or based on somewhat similar tactics and such, there's nuances. A couple of them I know had, hey, look, if your credit score's here, don't bother. If you've had this many inquiries on your report in so many months or what have you, that's an issue and it knocks them out of the box. What about you?
Yeah, we're looking at the same thing. I think I can work around inquiries. Now, if they've got 40 inquiries on the credit report, that's tough. But something reasonable. When I look at a credit report, it's not just scores. I'm looking at how much credit card debt they have compared to how much they have in credit card limits. One of the biggest factors that holds me back from being able to deliver is new accounts reporting to their credit. So inquiries can be a factor, a limitation factor, but new accounts reporting, once those exceed 2 or 3 for the last 12 months, I'm usually limited on what I can do for you. Unfortunately, when people go and apply for funding, it happens all the time. I understand the logic behind it, but from an underwriter's perspective, they look at an individual who has new accounts or a lot of inquiries as somebody who's trying to supplement their income with new credit cards or new loans. And they try to back away from somebody like that. So they'll hold off until that seasoning period has kind of taken place of maybe 6 months or 12 months before they would consider that application again. So,
it's good to know.
With this, you said they're unsecured personal, right? Do you have actual business loans or business programs to help build business credit still?
Yeah, so all of our business credit program, it's all under the company. The only thing that we do that's personal is the term loan product.
Okay, got it.
And the reason why we use the personal loan is because it's priced so much better for the customer than a business loan product would be. Less restrictions to qualify, less restrictions on the use. There's really not many limitations on how they use the funds as long as they qualify, but it's priced probably 50% less expensive for them than a business loan would be in the current marketplace. And even over the last couple of weeks, a lot of those business loan options have kind of disappeared. So we're seeing a large rush of demand, not only from the customer side with businesses coming to us for funding, but also on the liquidity side. You know, we're doing more lending now than we have before. And, you know, always humbly speaking, you know, other guys are in the business and they're not doing too well. And you just try to fill the gap and, you know, get them over to our side where they can still do deals and help people get funding and not kind of lose their shirt. Because none of this was anybody's fault. You know, it's not like this was based on subprime debt or bad business practices. This came out of nowhere. So I think you got to just be a helping hand to everybody else in need.
Sure. So you touched on costs. So let's kind of dive into that. We're pretty transparent around here. So let's talk about are there upfront costs? Are there, you know, what kind of rates and terms are we talking? I mean, you know, Sam and I, we always talk about how as being hard money lenders, like you always hate talking rates and terms because you just don't know. We just always talk ranges. So we can talk ranges, we don't get into specifics because every person is obviously going to be different from another.
Sure.
So.
Yeah, no, that's a great question. So on the business credit programs, I'll talk on the rates in terms of what the cost of the funds are. On the business credit side, they do get 0% interest for the first 6 to 12, even up to 18 months. What I'm seeing right now, it's between 9 to 12.
Crazy.
After that, it's anywhere between 5.9 and 14.9. It can go higher if somebody's had like a bankruptcy or some excessive negatives on the report. We'll always tell somebody that before we start, so that way they're very clear on what they can expect. On the term loan, there's no 0% period, but it's priced anywhere from as low as 4.9% and can go as high as 12.9%. Nice. It's really based on the strength of their personal credit.
That's incredible.
Yeah, the way our programs are designed.
Kind of floored, to be honest with you. That's for an unsecured. If you've got good credit, and that's credit cards aren't even close to that.
Yeah, I mean, we've seen a little drop in rates once the Fed dropped all the rates. So we've seen a little, I'd say, lowering of the cost just a little bit, not too much on our side, but I mean, we've been doing this a long time, and I just don't believe in selling something I wouldn't take myself. So if there's some other companies out there that will do like a merchant cash advance, and it's relatively expensive for businesses, but we've just kind of steered clear of those products, and we only sell what we would take ourselves and what we think can be an advantage to our client's business.
Okay. So if I was able to get a $200,000 loan approval from you guys, as a real estate investor, what would be the top 3 things you'd want me to do with that money?
That's a great question. So our business credit program is a great source of working capital if you're rehabbing properties. The term loan is a great source of liquidity that gives you options, whether you want to buy a house outright, depending on what you're paying for it, and then you want to refinance, or you're putting money down to get a larger loan on a larger investment property. You know, they serve different purposes. So when I'm actually talking to a client, based on what their project is or what they need the funds for, I'm going to recommend what the best option for them is. But once you have access to it, what's great is once you have access to the funds, you don't have to continue to go back and get approval. Sam, I know you guys do deal by deal basis, but once they get the funds from us, they can use these. And once they have access to it, they don't have to get approval to use it again. They also don't have to come back to me again if they pay it off and want to reuse it. They can renew the loan. There's no prepayment penalty on it. So if they wanted to pay it off in a year, they could do that and renew the loan. On the business credit, whatever they pay back, they can use again, and they can continue to service that and grow it and increase it. And I always encourage people to come back to me. Like I said, most of our clients work with us for an average of 2 to 3 years. So they'll come back to me to renew the loan, to get an increase on the credit, and even to raise capital for a different company. And so they come back to us for a few different reasons.
And that's a big key too, Mikyle. And what I enjoy is I hate renovation loans, right? I hate renovation funding. We sell it, but I don't care for it. And especially for an investor that's moving, got several projects going on. I don't have time to deal with draws. I don't want to wait for this. I don't want to wait for that. And there's also that leeriness from the standpoint of a lender that I don't know what you're doing with the cash. Maybe you're going to put it over on this other project that I didn't fund you on. So what's changing for us now is that we want complete control, right? I'm going to control all of your dough, and I'm going to have you come to the table now with that 6 months of payments in advance. I want you coming to the closing table now, that I'm going to keep that in escrow. The loan servicing company is going to make your payments for the first 6 months. Now, a lot of my clients enjoy that because now I ain't got to worry about nothing, Sam. I'll just do my thing. 6 months is I don't have to worry about making those payments, but it's not for everybody. So what's happening now is where the newbies are toast for the most part, right? Unless, because frankly, if they've never done a deal, I'm not in the student loan business. Not going to learn on my dime or my investors' money. So I've got to take that approach. So that's another reason why it makes sense for a group like us to work with you, Mikyle, because of the need. We fill a void in a lot of ways for investors. So it works out very well, on top of the fact that right now fix and flip funding is about all there is. No long-term stuff happening. The 30-year product, whenever Wall Street decides to come back, we might see that 30-year product come back to my side of things. So new construction is actually going to make its way back before that 30-year. So we're in that limbo time to where even the new construction guy can use the capital as long as they've got something established as far as credit and their business is concerned. Now, when you're looking at their business, is there a monthly income they should be generating to qualify?
That's a good question. So our programs are designed to work with whether they're an established company or they're a startup. It's not going to be based on their business revenue. It helps if they have a history within the company. If their corporation or their LLC or whatever entity that they're using, if it has some history to it, it helps us raise more money. But if they don't, they can have a startup and it's not going to hurt them too much. They can still qualify. They can still get access to the funds. We're not looking specifically at business revenues. It's really based on the strength of their personal credit and the strength of their personal income.
That's awesome.
Yeah, it is.
Because the funny thing is that we, one of our partners went to Bank of Tampa, which is it's obviously a local bank, but it's fairly aggressive. And when the Fed dropped the rates about a month ago, he went and applied immediately for a line of credit and got approved for $100,000 at 4%. And he referred somebody like a week or two later, and gone. Everything's gone. Yeah, so like you can't even go to the local banks who are usually pretty friendly to people, a little bit more lax than say a Chase or a Wells Fargo or any of the big banks, right? And he got literally the last loan approval before they shut it down because of coronavirus. So that's pretty awesome that you guys are still able to run your business. I'm glad you are, because I know a lot of people on this side are not. So it's good to hear.
Yeah, you know what? I think at the end of the day, we're all just doing the best we can. And I think there's a couple things you got to look for right now. You know, all the fluff just kind of goes away. When you hit rocky times, you got to focus on the key activities that are going to drive results. And you got to make sure you have two things. You got to make sure you have working capital, and you got to make sure you don't have too much leverage. Leverage that's working against you. You know, some leverage is very good. And being in the real estate business, we know that and how to use that properly. But leverage against you is something you got to do your best to minimize. And so, you know, we run a very lean company. I think we've just been smart with how we've managed our capital. And we end up doing a lot of consulting for the clients we raise money for. We don't charge for it. We probably should. And we'll probably have some more business training stuff that we launch in the future. But, you know, I'm just giving advice to people based on what I see. I can size up their company in 5 minutes and tell them, look, this is what we should raise for you. This is what you got to get rid of. And these are some of the adjustments you have to make. And I think this is a time where it really forces you to look at what's important and what's critical. And a lot of the other stuff that's just not important or not applicable right now, you just got to put to the wayside, man. Take care of your people, take care of your money, and make sure you're making good decisions every day and you're in the right headspace.
Words of wisdom from another young dude, man.
It's amazing. Yeah.
Me. You're killing me. That's awesome. We may be coming out of it. I don't know, whatever the press says. We've got months ahead. What do you see shifting, you know, with your knowledge and wisdom? And you've got a pretty damn good circle of influence around you as well. So what kind of vibe are you getting about what's happening?
So a lot of the smart money is they're playing the game as if it's going to end tomorrow, right? You still got to operate your business, but they're preparing as if it's going to stay in place for the next 6 months. And we don't honestly know what's going to happen. So you got to carry on business as usual, but you got to insulate yourself. I've got a lot of people coming to me that are raising money just to put it on the sidelines. Yeah. Because like you said, that local bank in Tampa can cut it at any moment. And even my services, you know, we're all subject to the market. If this whole thing shuts down and banks shut down, which I don't think is likely ever going to happen, but it could. And, you know, I think you just got to protect yourself, get your funds together, manage your money, collect on your receivables, and get access to the working capital you need. So that way you're never having to come out of pocket, or you're ever stuck in a position where if you're forced to pay something, you can't cover it. You know, that's the worst position to be in.
Sure. Well, Sam, thanks for the introduction. I really appreciate it. We'll be obviously in touch. We will be giving you guys the link, obviously, because this is not a live. Unfortunately, we had technical difficulties. So we'll be posting the link for you guys if you are interested in getting any of Mikyle's stuff, loans. We will be putting that link in the comments and in the post. So, dude, thanks for coming and sharing some knowledge with us today. And thank you, Sam, again for the introduction.
Absolutely. Mikyle, great to see you. We're definitely going to talk again real soon.
Thank you, guys. Appreciate it.
Thanks, Greg.
Okay, bye-bye.